Hey guys, this is Karthik Khanwal from Apex FinServe, and well, I'm back with the charts for tomorrow's trading session. The equities and the indices as usual. Nothing new about that. Now, about the trades that we had discussed yesterday. So today was a really good day for us when we talk about the watch list in particular, because we had three triggers and all three of them hit the targets. So it was really a good day. Not, I'm sorry, two hit the targets, and the third one closed about 0.5% in green. But all things considered, it was definitely a good day for us, and I hope you guys had a good start to the week as well. Now, starting with the charts for tomorrow's trading session. So the first one that we have is PEL, or Pyramid Enterprises. Now here we are going to go for a short entries. Two reasons for that. The first one, as you can see, it was a resistance turned support. Now broken on the downside, it has turned resistance again, the level of 1300. The second reason being, if you look at the structure of lower low, lower high, then the retracement of this swing low, this lower low leg, it comes out to be 50% retracement, comes out to be at 1303 or 1304. So it is a balanced entry point, neither too aggressive nor too conservative, and it's also a big round psychological number. So multiple benefits. Sorry. So we'll be going for a short position at 1300, stop loss at 1320, ideal targets 1% on the downside. Moving on to the next one, MFSL. Now MFSL, we are going to go for a long position at the level of 575. It was a supply zone in the past. It has turned into a support level as of now. Even though there's a gap to be filled, but still the price has come to that point multiple times in the past and then gone right back up. So we are going to go for a long position at 575, stop loss at 565, ideal targets 1% on the upside. I'm moving on to the next one, Oro Pharma. Now Oro Pharma, we are going to go for a breakout trade on this one. We are, if you can see on the chart, I have zoomed out quite a bit, but that's only to highlight the importance of this level to you guys. If you can see, it has been the origin point of multiple impulsive sell-offs or multiple swing legs or lower low movements, and every time it has crossed impulsively, and the momentum has carried on. So that is what we are going to be expecting this time around as well. If the level of 800 is breached on the upside, then it should go anywhere until at least 810, 812, 815. But we are going to be conservative with the targets at 1%. So the trade here is to go long above 800 SLM order type, stop loss at 790, ideal targets 1% on the upside. Moving on to the next one, Bharat Forge. Now Bharat Forge, we are going to go for a breakdown trade on this one, because as you can see on the chart, the level of 480 has been acting as a support since the last week. Twice it interacted and then went up, but every time it did go up, or the second time it went up, it formed a lower high, which means that the intensity of demand that came on the second time around was decreasing, and the sellers came into the picture pretty quickly. And furthermore, if you draw a pattern, then it resembles some sort of a rounding top pattern, again a bullish to bearish reversal pattern, which fits in the trend perfectly because it was a bullish stock. So we are going to go for a short entry under 480, stop loss at 490, just to give it a bit more room for movement, and ideal targets, as I said, or as I always say, 1% on the downside. Moving on to the next one, Lupin. Now Lupin, we are going to go for a short position on this one, simply because the level of 945 has been a supply zone in the past, and every time it has interacted with that level, it either has crossed impulsively or it has had a big sell-off originate from that point. And last week it did cross that impulsively, but then it gave that level right up. So it seems that level is acting as a pretty strong point of resistance or a pretty strong origin of supply. So we are going to go for a short position at 945, stop loss at 957, ideal targets 1% on the downside. Moving on to the next one, SR Transfer. Again, we are going to go for a breakout trade. If you can see on the chart that this band of price from 685 to 690 has acted as multiple times as an accumulation zone, and since the last 2 days, that is pretty much what's been happening. It has been accumulating in that zone. So we expect that the price, if it breaks and sustains above 690, it should shoot up pretty nicely. So that is the trade that we are going to be taking. Buy above 690, stop loss at 680, ideal targets 1%. So this is a breakout trade, just like Bharat Forge, not breakdown but breakout. Moving on to the next one, Apollo Hospital. Now Apollo Hospital, really very simple trade this one. We had a support level at 1672. If you remember, we had taken this trade, we had gone long and short both at this particular level last week, and that hit the target. So that is the exact same trade that we'll be taking again. We are going to go for a short at 1672. Ideal targets 1% on the downside, and stop loss goes at 1695. Moving on to the next one, escorts. Escorts, it's not been a regular participant or a regular appearance on the watch list, but the chart that we have on escort, that is pretty nice. It is visibly clear that it was in a range from 1086 to 1165, and that range was broken out a couple of times, but not sustained. And even this time last week, the range was broken very, very violently. It even had a somewhat resemblance of a flag pattern or a pennant, but again that could not be completed. So it is back inside that range now. So we are going to go for a short position at the higher ceiling of the range at 1165, stop loss at 1180, and ideal targets as always 1% on the downside. Now coming to my favorite part as usual, the indices, starting with the first one that we have, Nifty. Now Nifty, if you remember, not remember, but if you have seen the previous couple of days of videos, then we have had the Fibonacci retracement from the low of 20 to 21st and the high point of 31st of August. But that Fibonacci, if you consider the 15 minutes time frame, that retracement is now invalid, and we don't really have a new a structure formation, because if you look at the structure formation, that was a very big lower low lower high form, and then if you look at this as a larger structure, as a part of the larger structure, then you can say that it is a lower high and then again coming down, but it is riddled with gaps and the movement is not one directional in nature. So I don't really think you can plot a Fibonacci sequence right now if you're being fairly balanced, not too aggressive, not too conservative. So we don't have Fibonacci right now, but what we do have are the lovely demand and supply zones on our charts. So now the idea is to take trades on the basis of the kind of interaction that we have with these zones. As of now, this 100-point range decides to, is going to be the controlling range for Nifty, 11,325 to 11,425. Depending on which side it breaks, you can get a quick 50 to 60 or even 70 to 80 points move. But if it's not breaking either side, then you can even go for ping pong trades, depending on the kind of confirmation that you get in live markets. That's up to you. Now talking about the option chain for Nifty, we have immediate resistance at 11,400, which coincides with the upper ceiling of the range or zone, with 741,000 added contracts. Significant at 11,600 with 576,000 added contracts. On the support side, we have 11,300 with 782,000 added contracts, and significant support at 11,200 with 612,000 added contracts. So the range that we have, 11,325 to 11,425, it also coincides with the option chain range of 11,400 to 11,300. So if you are a conservative trader, wait for the breakout of these two strikes, and depending on the direction and the strength of breakout, you can enter. If you are an aggressive trader, you can go for quick scalps between this 100-point range for 30-40 points each time. It depends on your level of conviction and your the kind of risk management that you follow. Now moving on to the next one, Bank Nifty. Now Bank Nifty is, as I said, Bank Nifty has been a bit more stable than Nifty, and it is visible in the Fibonacci too. The retracement that we had on Bank Nifty from the same dates, 20 to 21st or low, and 31st August ka high, that is still holding strong. That is absolutely valid. There is nothing to worry about. So there's no problem with Bank Nifty when we talk about the Fibonacci retracement. So that is something that we can still use. Those levels we can still use. So on Bank Nifty too, we have one decisive zone in the middle at 22,950, upper zone at 23,170, and lower zone at 22,650. So and these are also levels that are coinciding with the Fibonacci. Upper zone coincides with 0.618 and lower zone coincides with 0.786. So depending on the kind of price action confirmation that you get in live markets on either of these zones, you can go for a fairly aggressive but a safe entry point for your trades. But I would suggest trade breakout of zones, because that is generally more rewarding. The RR is a bit better. Now when we talk about the option chain, we have immediate resistance at 23,000 with 509,000 added contracts. We have the next level or significant resistance at 23,500 with 320,000 added contracts. On the support side of things, we have immediate support at 22,800 with 103,000 added contracts, and significant at 22,500 with 192,000 added contracts. So, well, even the option chain on Bank Nifty, that's not really, telling us which direction to go in strongly. The writers are more or less available on both the sides. The only thing is, I would say calls have been written in a slightly more aggressive manner than Bank Nifty. So the call writers, or the resistance makers, they are a bit more confident about their levels that are going to be held up. But let's see. That's nothing to that's not really a trigger that I would entirely like to place my trades upon. Now, when we talk about the PCR for both the indices, they are in the bearish territory. For Nifty, it is 0.84. For BNF, it is 0.93. This is the PCR of volume. So the option buyers on both the indices, they are pretty bearish as of now. But as I always say, option buyers are very, very speculative participants. They will not hesitate to shift and close their positions, because all they have the risk of is losing the premium or some part of the premium. So don't believe too much on that. Still, you can take it as a reference point. But for tomorrow, I would suggest be it Nifty or Bank Nifty, trade the breakout of the zones, because that generally is going to give you a better RR, especially on slightly low volatile days like today's, where Nifty was pretty hard to trade. In fact, I did not have a trade on Nifty for that very reason. There was no high conviction entry point. But other things aside, these are all the charts that I had to discuss with you guys for tonight. I hope you guys had a really good green trading session today, and I hope that you have an even better one tomorrow. As usual, if you want any of these charts, the watchlist trades, the option chain analysis, or anything else, you can always check out the Telegram channel at the rate Apex FinServe. Find us out on Instagram, Twitter too. Support us as much as you can. Don't forget to like, share, subscribe the channel, comment something nice, and as usual, again, don't forget to press that bell notification icon so that you don't miss the daily upload series or even the weekend upload series. Thank you so much for watching, guys. I hope you have a wonderful green trading session tomorrow. Have a good night. Bye.